Hi, this is Sean Broderick for UncommonWisdomDaily.com. Crude oil is currently going through what looks like a steep correction. The question for investors is, how low can crude oil go? And the question for people driving their cars is, how cheap will gasoline prices get? I'll try to give you some clues to both of those today. Let's start by looking at a chart of crude oil. This is a daily chart of crude oil through Monday morning. You can see that crude oil came down to test support at its 38% retracement of its big move. That means crude oil is now down 38% from just the end of last month. Wow. We have too much oil supply on the market and not enough demand. So prices could go lower. But you have to remember that crude oil is functioning as an alternative to the US dollar, which has enjoyed a great run in recent weeks. I think dollar bulls will probably be taking profits soon. When the US dollar goes lower again, and I think that's not too far away, crude oil will go higher. In the short term, we could easily see crude oil go down to test support where a 50% retracement of its big move lines up with its 200-day moving average. That's the blue line on the chart, and that's under $54. And if we see an overshoot, and volatility is the most explosive thing about crude oil now, we could see crude oil go down to as low as $50. Could it go lower? Sure. Fundamentals would point to lower prices, but crude oil moves more on sentiment now. So the $50 to $54 range should be strong support. How would this affect gasoline? Let's look at a chart of reformulated gasoline and try to figure that out. Naturally, gasoline is tracking crude oil, but it's falling even faster. It's been hurt by the fact that gasoline usage over the July 4th holiday hit a 5-year low and dropped 3.3% from last year. So, good news for drivers. Gasoline should get cheaper in the short term. But don't get too used to these lower prices. If we see oil hold support in the $50 to $54 range, or wherever it finds a near-term bottom, we could see it quickly go up to $65 a barrel, even $75 a barrel. Remember, it's not fundamentals but sentiment that is driving this market, and the speculators who are selling it now could easily switch sides and start buying it. And that could send oil prices and gasoline prices zooming in the other direction. Now, all I've talked about so far is the short-term drivers. Longer term, the fundamentals for oil are actually very good. Longer term, we should see much higher prices. So, it's a very volatile, very much a fast and furious market. In the short term, we are playing this move down in oil in red-hot commodity ETFs with a ProShares ultra-short oil and gas ETF, symbol DUG. But I have one eye on the exit and will be ready to change sides at a moment's notice. Going forward, expect more volatility, but also profit opportunities as well. This is Sean Broderick for UncommonWisdomDaily.com. Thanks for watching.